Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is February 28th, 2025, and we're diving into Global Partners' fourth quarter and full year 2024 earnings report. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Global Partners has had a transformative year, and I'm excited to discuss their financial performance and strategic initiatives.
Revenue and profitability overview. Let's start with the top line. Global Partners report a net income of $23.9 million for the fourth quarter of 2024, a significant drop from $55.3 million in the same period last year. John, what are the key factors behind this decline?
The decline in net income is primarily due to lower sales, which fell to $4.2 billion from $4.4 billion in Q4 2023. This was mainly driven by a decrease in prices, although there was an increase in volume sold. Despite this, the full-year gross profit increased to $1.1 billion, up from $973.6 million in 2023, indicating improved operational efficiencies.
That's interesting. So while the quarterly figures show a decline, the annual performance seems more positive.
Exactly. The full-year net income was $110.3 million, down from $152.5 million in 2023, but the increase in gross profit suggests that Global Partners is managing its costs effectively and capitalizing on its expanded operations.
Strategic initiatives and expansion. Global Partners has been on an expansion spree. Can you tell us more about their strategic initiatives and how these have impacted their operations?
Absolutely. Since late 2023, Global Partners has more than doubled its terminal count and capacity, adding 30 terminals and increasing storage capacity by 12.1 million barrels. The acquisition of 25 terminals in December 2023 expanded their network into new markets, including Maryland, the Carolinas, Georgia, Florida, and Texas, bringing their operations to 18 states.
That's quite an expansion. How does this position them in the market?
This expansion significantly strengthens their position in the U.S. liquid energy market. With greater access to critical pipeline and marine networks, Global Partners is well-positioned to leverage its supply, terminaling, and marketing expertise to seize growth opportunities and create long-term value for its unit holders.
Segment performance and market conditions. Let's delve into the segment performance. How did the different segments fare in the fourth quarter?
The gasoline distribution and station operations (GDSO) segment saw a decline in product margin to $213.6 million from $245.4 million in Q4 2023, primarily due to lower fuel margins. However, the wholesale segment experienced a significant increase in product margin, rising to $79.8 million from $51.9 million, driven by the acquisition of liquid energy terminals and favorable market conditions.
And what about the commercial segment?
The commercial segment's product margin was relatively stable, slightly increasing to $8.6 million from $8.4 million in the same period last year. Overall, total volume increased to 1.8 billion gallons from 1.6 billion gallons, indicating strong demand across segments.
EPS forecast and analyst expectations. Now let's talk about earnings per share. Global Partners reported an EPS of 52 cents for the fourth quarter, which is more than double the forecast of 24 cents. What does this tell us?
This is a significant beat on the EPS forecast, which was based on a survey of just one analyst. Despite the challenges in the quarter, Global Partners managed to deliver strong earnings, showcasing their ability to navigate market conditions effectively. However, the full-year EPS was $2.41, down from $3.76 in 2023, reflecting the overall decline in net income.
That's quite impressive for the quarter. How does this affect investor sentiment?
Such a strong beat on the EPS forecast is likely to boost investor confidence, as it demonstrates the company's resilience and operational strength. It also highlights their strategic initiatives' positive impact on financial performance.
Operational efficiencies and future outlook. Finally, let's discuss operational efficiencies and the future outlook. How did global partners perform in terms of operational metrics?
Adjusted EBITDA for the fourth quarter was $97.8 million, down from $112.1 million in the same period last year, while adjusted distributable cash flow was $46.1 million compared to $58.8 million. Despite these declines, the company announced a cash distribution of 74 cents per unit, reflecting their commitment to returning value to unit holders.
And what does the future hold for global partners?
According to CEO Eric Slifka, Global Partners is well positioned to leverage its expanded footprint and strong balance sheet to seize growth opportunities. The company is focused on creating long-term value for its unit holders, and with their strategic acquisitions and operational efficiencies, they are set to capitalize on future market opportunities.
Key takeaways. In summary, Global Partners has delivered a strong fourth quarter performance, beating EPS expectations and demonstrating resilience in a challenging market. With strategic expansions and a focus on operational efficiencies, the company is well positioned for future growth. Thank you for joining us, John.
Thank you for having me. It's been a pleasure discussing Global Partners' performance.
Thank you for watching Smart Stock Watch. Don't forget to like, share, and subscribe for more in-depth financial analyses. We'd love to hear your thoughts on Global Partners' performance in the comments below. Until next time.